Well, we have a guest joining us now to make sense of this metals rally. We have Amit Dixit now joining us uh, from Edelweiss. Amit, good afternoon. Thanks for joining us. It's been a big cycle, super cycle that metal stocks are part of right now. Do you see more gains from here on as well?
Hi. So what I see is that metals. You will all appreciate that there are only few days of purple patch, and these are typically few and far in between. Now, specifically talking about the rally today. So yesterday there was a statement in China by in the Minister of Industry, and the Chinese actually 14 5-year plan is going to be unveiled by end of this week, and it talked about production cuts in both steel and aluminium. I think today's rally is more driven by that factor. Now, one needs to be a little bit cautious about this optimism. Number one, if there is a production cut in steel, then while steel market balance in the rest of the world becomes sanguine, and that helps steel prices. On the other hand, the iron ore cost push that we have been seeing throughout, that might take a little bit of backseat. The reason being that in case of iron ore, China is the key consumer of seaborne iron ore, and if there is lower demand, you can expect prices also to trend lower. That is point number one. Point number two, a lot of end user sectors also might be impacted in China's push for reducing their carbon footprint, and we will know the fine print in detail. However, for now, definitely, the street was expecting that this year in CY21, Chinese exports would go up, which, looking at the statement from industry minister, it doesn't seem to be the case. Production was expected to grow. Looking at his statement again, people are optimistic that production would be cut. So all these things are coming in play. Even a little bit of swing here and there in case of China is something that moves the entire market balance to either side. So I think this is the optimism that is playing around. We would get to know the fine print pretty soon.
Okay, Amit, thanks a lot for that quick take. Let me get Prakash's